The dining room at the Riverside Country Club gleamed with holiday elegance as my family gathered for our traditional Christmas Eve dinner, celebrating what they considered another successful year of career advancement and professional achievement. Crystal glasses clinked with champagne toasts while conversations centered on promotions, salary increases, and the kind of corporate success that impressed their social circle. I sat quietly at the end of the table, laptop closed beside my plate, listening to animated discussions about my brother Michael's recent promotion to Associate Portfolio Manager at Whitmore Financial. The achievement had dominated family conversations for weeks, with Mom and Dad treating his entry-level banking position like a triumph of professional excellence that validated their emphasis on traditional career paths. "Michael's doing exactly what we hoped," Mom announced proudly, raising her glass toward my younger brother. "Real finance with a prestigious firm, building genuine wealth through legitimate business. It's so important to have family members who understand how actual success works in the professional world." Michael basked in the attention, explaining his responsibilities managing small client portfolios with the confidence of someone who'd finally proven his worth to parents who valued conventional achievement above all else. At 26, he'd followed the exact path they'd mapped for family success: elite university, corporate internships, entry-level position at a respected financial firm. What made the evening particularly ironic was that they'd been systematically dismissing my technology company for 3 years while celebrating career moves that would never generate a fraction of what my internet hobby had already achieved. "When are you planning to transition into legitimate work?" Dad asked with the patient concern of someone addressing a persistent family problem. "This internet business phase has been interesting, Emma, but at some point you need to join the real economy and build actual career stability." My internet business had started as a cybersecurity consulting firm that I'd built from my apartment while they encouraged me to apply for corporate positions that would provide the kind of steady paychecks they understood. What they didn't realize was that my company had evolved into a comprehensive cyber defense platform that protected major corporations from advanced persistent threats. "Emma's always been creative," Michael added diplomatically, "but creativity doesn't generate the kind of reliable income that builds long-term financial security. At some point, passion projects need to become actual businesses." The characterization of my company as a passion project was particularly amusing since my creative internet hobby had generated more revenue in the past year than Michael would earn in his first decade of traditional banking. But explaining the complexities of enterprise cybersecurity markets to a family that measured success through corporate hierarchy seemed pointless. "We're proud of your technical skills," Mom continued with maternal warmth that masked fundamental dismissal. "But technology work is so unstable. One day you're successful, the next day the market changes and everything disappears. Michael's building something permanent with Whitmore Financial." The irony that they considered entry-level banking more stable than cybersecurity leadership in an increasingly digital economy wasn't lost on me. They'd watched me work 18-hour days building something substantial while treating my achievements as hobbies that would eventually be replaced by real career decisions. Tomorrow morning, when the NASDAQ opened for trading, they'd learn exactly what my internet hobby had been building while they'd been celebrating Michael's traditional career path. Tonight, I'd let them enjoy their last Christmas as the family that understood how actual success worked. The week between Christmas and New Year's unfolded with the same pattern of professional condescension that had defined my family's attitude toward my technology company for 3 years. Morning calls from Mom about job opportunities she'd discovered through her corporate networking contacts. Afternoon conversations with Dad about the importance of establishing traditional career credentials before pursuing entrepreneurial ventures. None of them had bothered to research what my company actually did or questioned how my internet hobby had been funding the lifestyle they'd assumed I maintained through family support or accumulated debt. "Emma, I've been talking to colleagues about entry-level positions in technology consulting," Mom announced during our New Year's Eve planning call. "Several firms are looking for people with your technical background who could transition into legitimate business development roles." The suggestion that I needed to transition into legitimate business development was particularly absurd since my company had just completed a Series C funding round that valued us at $800 million. But explaining venture capital dynamics to someone who thought legitimate business required corporate employment seemed futile. "That's thoughtful, Mom, but I'm pretty committed to growing my current company." "Sweetheart," she replied with the gentle patience reserved for adult children making poor decisions, commitment to personal projects is admirable, but at some point you need to consider financial security and professional credibility. Michael's position at Whitmore provides both stability and growth opportunities. Michael himself had been increasingly vocal about his banking success, explaining portfolio management principles with the confidence of someone who discovered the secrets of wealth building through traditional finance. His client relationships and investment strategies represented everything our parents valued: predictable income, corporate prestige, and advancement through established institutional hierarchies. The financial services industry offers real career progression, he'd explained during our family dinner. Technology companies come and go, but banking provides the kind of foundational business experience that builds lifetime earning potential. What Michael didn't know was that my technology company had been acquired the previous month by a Fortune 500 corporation for $1.2 billion in cash and stock. The foundational business experience he was building would take centuries to generate the wealth that my unstable technology work had created in 3 years. "We just want to see you secure," Dad had added with paternal concern. "Entrepreneurship is risky and technology markets are notoriously unpredictable. Michael's building something sustainable that will support him through economic changes." The conversation had been interrupted by my phone buzzing with notifications from my investment banker, my corporate lawyer, and my financial advisor, all confirming final details for the public offering that would make my acquisition proceeds available through tradable stock when markets opened January 2nd. My family had spent 3 years encouraging me to abandon my internet hobby for stable corporate employment while I'd been building a company that would generate more wealth in a single trading day than their traditional careers would produce in multiple lifetimes. Tomorrow they'd finally understand the difference between earning money and creating value in modern economic markets. The family gathering on New Year's Day felt different as we assembled around the television to watch traditional holiday programming, though I'd specifically requested we tune to CNBC for the market opening. My laptop sat ready beside me, displaying portfolio management screens that my family assumed were related to personal investment tracking rather than monitoring a public offering that would fundamentally alter our family's understanding of wealth creation. "Why are we watching financial news?" Michael asked, checking his phone for banking industry updates that might affect his portfolio management responsibilities. "The markets are just reopening after holiday closures. Nothing significant happens on the first trading day of the year." Before I could respond, the Nasdaq opening bell ceremony appeared on screen, featuring executives from my former company, now publicly traded as CyberShield Technologies, celebrating their debut as a publicly traded corporation. The ticker symbol CHD flashed across the bottom of the screen alongside opening price information that made Dad's coffee cup pause halfway to his lips. "CyberShield Technologies," the CNBC anchor announced, debuts today following their acquisition of a private cybersecurity firm founded by entrepreneur Emma Martinez. The company's comprehensive cyber defense platform has attracted major enterprise clients and positioned them as leaders in advanced threat protection. Mom's expression shifted from casual interest to focused attention as she processed what she was hearing. Michael's banking expertise forced him to understand the significance of the numbers scrolling across the screen: opening price, market capitalization, trading volume that indicated substantial investor interest. "The acquisition," the anchor continued, valued the original company at $1.2 billion, with founder Emma Martinez retaining significant equity in the merged entity. "Today's public offering makes those holdings tradable, creating one of the year's most substantial wealth creation events in the technology sector." The silence in our living room was absolute as my family realized they'd been watching my internet hobby transform into publicly traded wealth that exceeded anything they'd imagined possible. Dad's traditional business expertise couldn't process how someone working from an apartment had built something more valuable than the corporate hierarchies he'd spent decades navigating. "Emma," Mom said slowly, "is this your company they're discussing?" I opened my laptop and displayed my portfolio management screen, showing equity holdings that had become worth approximately $2 billion as trading began. "Actually, it was my company. I sold it last month and retained equity in the acquiring corporation." Michael's entry-level banking position suddenly seemed less impressive when compared to wealth creation that his financial training had never taught him was possible through technology entrepreneurship. 6 months later, I received a LinkedIn notification showing Michael's job change, He'd left traditional banking to join a technology investment firm specializing in cybersecurity startups. His career pivot represented a complete reversal from his previous dismissal of technology markets as unstable and unpredictable. Mom and Dad had quietly begun researching technology entrepreneurship, attending seminars about startup investing and venture capital that they'd previously considered too risky for serious consideration. Their emphasis on traditional career paths had shifted dramatically once they understood how modern wealth creation actually worked. The family dynamics had fundamentally changed once my internet hobby generated more wealth than their traditional careers would produce across multiple lifetimes. Country club conversations now focused on my business achievements rather than Michael's banking promotion, and family gatherings included discussions of technology trends rather than lectures about joining the real economy. I'd established an investment fund focused on supporting other entrepreneurs whose families didn't understand the value of what they were building. The experience had taught me that traditional measures of success often missed the most significant opportunities for wealth creation. Real economic understanding meant recognizing value creation regardless of whether it fit conventional business models. Sometimes the people who understood money least were those who'd spent their careers working in traditional finance while actual fortunes were being built by entrepreneurs they'd never bothered to take seriously. The internet had always been real. Now everyone finally knew it.